Hello and welcome back to MoneyMasterMind. Today we are exploring how to master the stock market using smart money. Now let's get started. But first, if you enjoy this content or anything related to investing, be sure to like and subscribe for more videos like this. Now let's get straight into it. In the fast-paced world of stock trading, accurately predicting price trends can mean the difference between profit and loss. Understanding market movements is essential for investors looking to stay ahead of the curve. This video explores the significance of predicting stock price trends and introduces the concept of smart money. Predicting stock price trends is crucial to maximize returns and minimize risks. By anticipating market movements, you can make informed decisions, capitalize on opportunities, and protect your investments from potential downturns. The ability to predict price trends accurately enables you to stay proactive in managing your portfolios and achieving financial goals. Enter the concept of smart money. Smart money plays a pivotal role in shaping market trends and driving price movement. Institutional investors, with their substantial capital and sophisticated strategies, often have a substantial influence on market direction, making their activities a valuable indicator for retail traders. This video focuses on techniques for leveraging smart money insights to predict stock price trends effectively. By understanding how institutional investors operate and analyzing their behavior, you can gain valuable insights into market behavior and potential future movements, from identifying key indicators to implementing strategic approaches. Mastering smart money predictions opens up a world of opportunities for traders and investors alike. In the world of stock market dynamics, the concept of smart money holds significant weight, dictating market trends and influencing price movements in profound ways. Smart money represents strategic, well-informed investment decisions backed by extensive research and analysis. Unlike retail investors who typically engage in trading with smaller capital and less sophisticated strategies, smart money represents the collective wisdom and resources of hedge funds, mutual funds, and pension funds. These institutional investors often have access to in-depth market research, advanced analytics, and insider information, enabling them to make informed decisions with a long-term perspective. One of the key distinctions between retail and institutional investors lies in their investment approach and market impact. Retail investors, comprising individual traders and small-scale investors, often react to market news and trends, contributing to short-term volatility and sentiment-driven fluctuations. In contrast, institutional investors possess the financial power and expertise to execute large-scale trades, exerting significant influence on market direction and price trends. Understanding this differentiation is crucial for traders seeking to discern market dynamics and anticipate future movements accurately. Smart money's influence on market movements and price trends is undeniable. Institutional investors' substantial capital allocations and strategic trading decisions can create waves in the market, driving trends and shaping investors' emotions. Their collective actions, such as large-scale buying or selling, can trigger momentum shifts and set the tone for broader market movements. By tracking smart money activities and analyzing their impact on price action, you can gain valuable insights into market behavior and position yourself strategically to capitalize on emerging opportunities. To navigate the complexities of the stock market and leverage smart money insights effectively, you must be capable at identifying key signals that indicate institutional activity and market behavior. Tracking smart money movements requires a keen eye for key indicators and the use of specialized tools. Volume analysis, for instance, serves as a powerful signal of institutional activity. Unusual spikes in trading volume, particularly in pair with significant price movements, often signify the participation of institutional investors. Also, monitoring price action through techniques such as accumulation and distribution analysis can reveal trends in smart money positioning. By employing technical indicators like on-balance volume and volume-weighted average price, you can gauge the strength and direction of institutional flows with greater precision. Analyzing volume and price action is crucial in discerning institutional buying and selling patterns. Institutional buying typically manifests as sustained increases in trading volume paired with upward price momentum, signaling confidence and conviction in a stock. Conversely, Distribution phases are characterized by elevated selling pressure and declining prices, indicating potential smart money exits. By interpreting volume spikes and price movements in union with market context, you can identify optimal entry and exit points aligned with institutional buying or selling. Leveraging insider trading data and institutional ownership reports provides valuable insights into smart money behavior and market dynamics. Monitoring insider transactions, including purchases and sales by company executives and institutional insiders, can offer clues about future performance. Likewise, analyzing institutional ownership trends, such as changes in portfolio allocations and holdings, allows you to measure institutional behaviors and anticipate market movements. By integrating these sources of information into analysis, you can enhance your understanding of smart money positioning and make more informed trading decisions. In the dynamic world of stock trading, mastering strategies for predicting price trends is key for achieving consistent success. By integrating smart money insights with proven trading strategies, you can enhance your predictive capabilities and capitalize on market opportunities effectively. Trend-following strategies leverage smart money indicators to identify and capitalize on established market trends. By aligning with institutional flows and momentum, you can ride the wave of smart money positioning and capitalize on sustained price movements. Using technical indicators such as moving averages, trend lanes, and momentum oscillators, you can confirm smart money-driven trends and enter positions with confidence. Also, monitoring institutional buying and selling patterns provides further validation of trend direction, enabling you to stay ahead of market shifts. Opposite approaches involve capitalizing on inconsistencies between retail behavior and institutional flows. By fading retail behavior and aligning with smart money positioning, you can profit from market inefficiencies and anticipate trend reversals. These strategies capitalize on the principle of smart money versus dumb money, exploiting retail investors' tendency to follow trends impulsively. Through careful analysis of trend indicators, such as surveys and retail trading activity, you can identify opportunities to enter these positions and capitalize on smart money-driven market reversals. Integrating technical analysis with smart money signals improves predictive accuracy and trading precision. By combining technical indicators with insights into institutional behavior, you can validate price trends and identify high-probability trading opportunities. Techniques such as divergence analysis, where discrepancies between price action and smart money indicators are evaluated, provide valuable confirmation of trend strength and potential reversal points. Also, incorporating smart money data into chart patterns and candlestick analysis allows you to decipher market perspectives and anticipate future price movements with greater confidence. By integrating these approaches, you can achieve a more comprehensive understanding of market dynamics and better your ability to predict price trends effectively. While smart money indicators offer valuable insights into market dynamics, you must navigate challenges and acknowledge limitations associated with relying solely on institutional signals. Relying solely on smart money indicators poses potential pitfalls and limitations. Institutional investors' actions may not always reflect accurate market perception, as their motivations and strategies can vary widely. Also, delayed or incomplete information regarding institutional activity may hinder timely decision-making, leading to missed opportunities or faulty trades. Market manipulation and false signals executed by large institutions can distort smart money indicators, complicating interpretation and undermining their reliability. Interpreting institutional behavior inaccurately carries inherent risks. Misinterpreting smart money signals can lead to misguided trading decisions, resulting in financial losses and missed opportunities. False signals or temporary deviations in institutional activity may mislead you into entering or exiting positions prematurely, worsening market volatility and increasing trading costs. Misjudging institutional perception can lead to overconfidence or complacency, exposing you to unexpected market reversals and adverse outcomes. To mitigate risks associated with smart money analysis and adapt to changing market dynamics, you should adopt a varied approach. Using different sources of information and incorporating multiple indicators into your analysis can provide a more comprehensive understanding of market behavior and trend direction. Employing risk management strategies such as setting stop-loss orders and managing position sizes, helps mitigate potential losses from flawed trades. Also, staying informed about macroeconomic trends, geopolitical developments, and regulatory changes allows you to anticipate shifts in market perspectives and adjust your strategies accordingly. By remaining watchful and adaptable, you can navigate the challenges of smart money analysis and capitalize on market opportunities with greater confidence and resilience. Accessing and effectively using smart money data is essential if you are seeking to improve your market analysis and decision-making processes. Here's a comprehensive guide to tools, resources, and strategies for smart money analysis. Numerous platforms offer access to smart money data, including financial news websites, market research firms, and proprietary trading platforms. Websites like Bloomberg, Reuters, and CNBC provide real-time updates on institutional activity, insider trading, and institutional ownership. Also, subscription-based services such as Insider Score and Centio offer comprehensive databases and analytics tools for tracking smart money movements and identifying trading opportunities. If you are looking to deepen your understanding of smart money analysis, an overabundance of books, courses, and research materials are available. Recommended readings include Trade Like a Stock Market Wizard by Mark Minervini, Market Wizards by Jack D. Schwager, and Reminiscences of a Stock Operator by Edwin Lefebvre. Online courses and webinars offered by reputable trading educators and financial institutions provide valuable insights into smart money analysis techniques and practical trading strategies. Combining smart money analysis with existing trading strategies requires careful consideration and adaptation. Start by identifying key indicators and signals relevant to your trading style and objectives. Incorporate smart money data into your technical analysis toolkit, using it to confirm trends, validate signals, and identify potential reversals. You also want to leverage smart money insights to better risk management practices and optimize trade entry and exit points. Regularly review and adjust your approach based on evolving market conditions and feedback from smart money indicators, ensuring alignment with your trading goals and objectives. By leveraging a combination of platforms, educational resources, and strategic insights, you can use the power of smart money analysis to gain a competitive edge in the market and achieve consistent trading success. Mastering smart money predictions is a crucial skill for success in the ever-changing landscape of the stock market. As we conclude this exploration, we will reflect on the significance of integrating smart money insights into trading strategies. Predicting market trends with smart money indicators allows you to make informed decisions and stay ahead of the curve. By understanding the behavior of institutional investors and leveraging their insights, you can identify high-probability opportunities and navigate market fluctuations with confidence. Whether identifying trend reversals, confirming signals, or managing risk, smart money analysis provides a valuable framework for achieving consistent trading success. I encourage you to dive deeper into smart money strategies and incorporate them into your trading routines. Explore the wealth of resources available, from online platforms to educational materials, and experiment with different approaches to smart money analysis. By honing your skills and adapting to market dynamics, you improve your ability to capitalize on opportunities and achieve your financial goals. As the stock market continues to evolve, so too must our approaches to analysis and prediction. Embrace innovation, stay informed about emerging trends, and remain adaptable in your strategies. Remember that mastering smart money predictions is not a destination, but a journey of continuous learning and refinement. By staying curious, disciplined, and proactive, you can navigate the complexities of the stock market with confidence and achieve long-term success as a trader or investor. Thanks for watching Money Mastermind. If you enjoyed this video, be sure to check out our other videos for more investing tips. Don't forget to like and subscribe to stay updated on all our latest videos, and we'll see you in the next one.